Hey, hello everyone. Welcome to Heredit Cafe. I'm Chris here. Let's take a look. Welcome to this weekly market review. Let's take a look at the markets and we'll visit some wave counts in Bitcoin and the S&P 500 as well. And just kind of follow our technical page and see if there's any signs that are worth mentioning or look interesting. But yeah, we've had a bit of a sell-off this past week in the markets. Nothing extremely significant or anything that would tell me that the markets are deteriorating at a rapid pace. If you keep an eye on the weekly charts, things continue to look, fairly healthy in a pretty decent uptrends. So, looking here at the New York Stock Composite, we remain above all these large key moving averages, which I use personally for identifying trends and see how the price relates to them by using basically the 10-week in black in here, the 40-week moving average, and then the much larger one, 200-week down below. And they're all in uptrends. I will also like to look, at how the volume behaves and the RSI. I also like to look at the PPO, which I don't have on here, but this is basically showing us a market that's not doing anything wrong week after week. Sometimes we have, some weaker action, but overall we remain in an uptrend. So we'll see how we react next week, and if we are able to close, next week below this 10-week moving average, that would be probably a more significant development. And could lead to a bit more weakness going into the end of the year. But for right now, that really hasn't happened. We're just kind of testing that once again, and we seem to have, just reversed a little bit more of that excitement after the election. So we have retraced about 50% of the previous week. But we are, well established in an uptrend in here. You can see that there is no real deterioration, not a lot of black weeks, no break of previous week's lows or anything like that. So, I remain optimistic. Obviously, I've reduced a bit of exposure. There weren't a lot of things to buy in terms of stocks, because a lot of stocks were quite extended, and a lot of them have been breaking out and looked good. So there really isn't a lot of merchandise out there that can be bought at the moment. So I keep my eyes open. I do have exposure, but I'm just kind of standing by and just waiting a little bit to see how we're going to progress here the next week. And as the composite, had a bit of a tougher week. We sold off also, similar to the other markets, a bit on a higher volume. So there is more, let's say, activity happening here near the highs. But again, nothing, really wrong. The RSI remains at about 60 on the weekly charts, and everything is pointing to the upside until we start to lose this 18,000. Until then, there is really not much to do here, but play a bit safe, and just keep your finger on the trigger, for stocks that are misbehaving or that are breaking key levels, and wanted to play a little defense if you need to on some of that. And then Dow Jones in here has been acting pretty well. I mean, hasn't even retraced. I don't even know, like 23% maybe of this, pretty decent rally we've had last week. So this looks well. Look at the RSI, just kind of bouncing between 70 and 50 in an uptrend, which looks good. IWM, had a pretty decent and strong breakout last week, and we retraced again about 50% of that. We're clearly coming into a zone of demand here. So I would expect this to hold. If we're starting to lose the low of the previous candle, then then things are going to look a bit uglier, and then you're having support here at about 209. So I remain long the small caps, taking a little bit of hit this week. but it's still fairly confident in this breakout and in the fact that the price, after it's been basing out for months on end, it finally started to trend. It's a very choppy market in the small caps. You can see, right? It's hard to trade or to hang on to it, but the moving averages are pointing up, and some of the counts I watch, they're still pointing higher. So I'm gonna try to give you the benefit of the doubt here with the RSI that's just clearly above 50, and that's a positive sign. Bitcoin, the best performer last week, the week before, great moves here in Bitcoin as we were expecting after this huge consolidation. I've been talking about it for a long time, and we finally break this 69.70, and we're trading 90. We were as high as I think 94 at some point, so it's doing nothing wrong. It's breaking and it's acting how it's supposed to be after it breaks, and consolidating a little bit in here. We'll take a look at the counts, but look at the volume. And finally, the RSI is moving up into 70s. We would want it to see it. We want to see it stay up here as long as possible, even kind of get into this kind of green shaded area, and just kind of stabilize there to kind of give more confidence in that strength and uptrend and buying and all of that. So that looks good. And then the US dollar, it's a bit of a curveball, as I talked at the beginning of the week when I've done that video, that it's acting strong, and usually when the dollar acts like this, it's going to put pressure on equities and and precious metals and risk in general. So we're trading at about 106, but coming into a big resistance. So this week will be important to see if it's going to be able to break or stabilize here and just start to retreat and give a little bit of a break to risk. And then gold finally broke that key 10-week moving average. It is coming at the daily time frame into a bit of a support, and the RSI here also coming back near 50, which is a decent place to watch for a reaction and see if there's bids that can be placed here, obviously with confirmation on smaller time frames to see if there's going to be a reaction, but it's coming into a more appealing zone, because what can happen if the dollar stops and starts to sell off, and gold finds support here near 50, you can get maybe another week of selling, just small, and then you can get a white week of buying, and this is just a quick correction, and then it does this and it moves back to the upside. So that's something that I'm watching for in gold and see what's going on. Maybe it can even travel all the way here to about 2400, but without damaging the RSI too much. All right, so let's take a quick look at the wave counts. I mean, the main count, the quarterly time frame, and you're probably familiar with this if you've been watching my videos. If not, welcome. But if I go back, let's say it's a 75, if I go back about 100 years, you can see my wave count. Many don't agree with this long wave one, but hey, we're I think in a new wave 3 type of environment, and that's kind of how I'm personally choosing to count it. There is obviously flexibility there if you don't agree, but I'm looking at this as a wave 2 low in the COVID, and then pushed higher in a wave 1, wave 2, and we're in this larger wave 3 at the moment, and I keep this as a guide that keeps me to remain bullish, cautious at times on the corrections, but overall I think you want to stay invested in the market. Taking a look here at Motive Wave on the wave count on, let's say, a weekly time frame with that wave 2, 1, 2, 3, 4, 5. This is a bit choppy and a bit interesting what's happening right here with the series of 1s and 2s. But my targets remain towards 62, 6300, possibly after we find support here at about 50% to 61% retracement of this latest move. And you've had this nice ABC, and could this be, let's say, a wave 1, 2, 3, 4, and a wave 5? Sure, and then you can get an ABC. I talked about this with our members there, I think on Thursday or Friday or Wednesday, but if that happens, you kind of have to build an impulsive wave down in 5 waves, then do a B wave, and then another C. So we'll see if that's the case. For right now, it seems that we only have about 3 waves. If we do another 4 and another 5, that's a clue that there might be another leg coming. So let's say you get a wave A here, and then you move higher, kind of sloppy, and you're getting rejected from moving averages, and you see every daily closing towards the lows. That's a sign that the sellers are still in control and they want to take this market down a bit more. So that can create an ABC, but I don't think it's anything that's going to be super extraordinary to the downside. More of a bit more extended correction, but nothing too damaging. So I'm watching this with the targets remaining here in this zone. Excuse me. For the S&P 500. Okay, let's take a quick look now at Bitcoin as well. And you've probably seen this count. Wave too low here in 2022. I think we had it. Push up in a wave 1 and 2. Nice sharp. Wave 3. If we look at this as a wave 4, then you can have an argument and say, well, if that's a 4, maybe you get equality with the wave 1. I mean, that's still kind of short. I guess it can push a bit higher, maybe just quickly above 100,000. And then if that's a wave 5, then, obviously what you would expect next would be some kind of a correction. I mean, they're never ideal or never textbook, but that would be the course that would happen. To me, this move here looks pretty strong, and it looks like it wants to continue, and it's very sharp for a fifth wave. But so my view is that this could even be a 1-2 1-2, and then you're actually in the much larger third wave. Remember, counts are very flexible, and I know there's people that do Elliott wave, and they're very sticky in the rules and look for reasons and other clues to tell you, well, this is, let's say 80 to 90% it's a second wave, or 90% it's a fourth wave, and then this one has got to be a 5. I mean, I've had arguments like this many years, and the market can laugh in your face over and over again and show you that it's not what you think it is, and most times it is not. Most times Elliott wave counts fail. Most times you have to adjust. So it's a matter of risk management and being flexible and adjusting and all of that. So, my labels here, yeah, they're interesting, and you can get an extended fifth wave for that reason, right? Nobody says that you can't. But it doesn't mean it has to happen just because I put it there, right? So, but for right now, what's clear is that Bitcoin has broken above that key zone. It is in an uptrend. It is looking strong. So I'll choose to respect it and stay with it as much as possible. And there is no sign in here that's telling me, hey, sell your Bitcoin because it's going to go back to 35,000. So I'm gonna continue to kind of stay on the long side and watch it daily and see how it behaves. And if it starts to break key levels, we can adjust. But we continue to remain long. We bought the breakout up here just below 65. We're trading 90. So we have decent, let's say, gains or percentage gains on it. So we'll continue to stay with it. This looks like a nice clean third wave. Maybe there's a bit more to go. Then you'll probably do a bit of correction, then another push up higher, and I don't think we're ending this move below 100,000. It's probably going to be above that by the time you get a more significant setback. So this is the count that I'm watching, and we're just kind of following along. Anyway, thanks for watching. This is it for this weekend. I appreciate you as always. Subscribe, like, come and visit us on elliottwave.com and elliottwavecafe.com, and I will see everybody next week. Bye-bye.